Hello and welcome back everybody. My name is Jens. I have 7 years of market experience since I bought my first Bitcoin, and since then I'm pretty active on financial markets. I created this YouTube channel so that you can follow my steps and yeah, let's trade together, make price analysis together and look what are the most likely scenarios for future price movements. And I focus heavily on S&P 500, US oil, gold and Bitcoin. That are my 4 core assets. But after the last Monday where the markets crashed, I want to change a little bit my strategy here, because I was a trader who bought and sold manually with no fixed stop loss. I had only marks where I said if we drop below that, probably the uptrend is broken and I want to sell the position or reduce the position. After this Monday where prices came so fast, so many percentages lower, I don't want to use this strategy anymore. I learned my lessons because nobody is perfect and you can always optimize for better results. So I do now and you can be part of that. Because of that, I closed my account I opened up for YouTube channel. I have to say I made some losses, nothing spectacular. It was minus 5% on the total account balance. But yeah, it was not expected and I could have been better with fixed stop losses in the market. Because of that, I want to use a demo account for TradingView to show you my trading, because here you can set up a fake account. The account balance I set on 100,000 US dollars. 100,000 US dollars is not the amount I'm trading with in real life, because I use IC Markets and IC Markets is not available on TradingView as a broker. And I like this platform to have an overview over the markets and price movements, and it would be ideal to show you also my trades so you can see really what I have done and when I have done it and what was the cost, because I also set a fake commission so that it's more realistic. And yeah, and I also don't want to show you with which amount of capital I'm trading, because that's the wild internet and not everybody has to know everything. So yeah, that's my account all set up. I have already 2 positions opened, but we will talk later about them, because like always, I start with S&P 500 on a weekly time frame. We can see that the market is still in an uptrend, but the weekly secondary orange dotted downtrend line got broken to the downside here, and that was the unexpected thing, because we had the end of the carry trade, the bad labor market data from the US, and the Near East conflict got back into the news, and because of that, prices declined pretty fast, and I wasn't able to hold my marks and sell my position fast enough. Then on turnaround Tuesday, prices recovered a bit, but the uptrend is still broken. We are below the 10-week moving average, and yeah, it's not impossible that we will see a reversal here and retest the high from January 2022 again. That would be the perfect spot for price to find a hold and start rising again from there. But so far it isn't yet. So let's drop down to the daily for more recent price analysis. Here we can see the third weekly impulse. And in this third weekly impulse, we had a daily impulse, a daily correction, a second daily impulse, and that should be the second daily correction, followed by a third daily impulse, marking the end of the third weekly impulse to the upside before the turnaround. But yeah, probably it came earlier than expected. The trend is definitely broken. I was able to draw a daily white downtrend line here, and at the moment it looks like an A, B, C pattern. Maybe we will broke it right now and make a retest and break then higher to the upside. That would be the level where I would like to think about a bullish long setup with a fixed stop loss, probably below the last low, or maybe if we have a really clean setback to the trend line that's then broken, I will set the stop loss below this smaller correction, and then for a 2-to-1 risk reward ratio or something like that. Excuse me. But the other scenario is that we don't break this trend line to the upside and we will reverse maybe now, maybe a little bit later, and break again the last low to the downside, and from there I would expect further downside movement, like I said, till maybe this last resistance level, support level here, or this major weekly support level. And from there on, I would again look for reversals and change of trend. But till now, nothing like that is visible for me, at least. On the 4-hour time frame, nothing special to say. The MACD crossed to the upside, but yeah, it did also here, and that was not a sign of a real reversal. Okay, it was for me because I thought here the daily downtrend is over. The downtrend line also was broken to the upside, but then the bad news came in and the market crashed to the downside. Yeah, now it's a little bit recovering, but that's every time the case. We have such a strong and fast sell-off. And yeah, so that we recovered so many percentages in such a short time is just normal to this heavy and fast movement. I will update you in the next weekend report what the S&P 500 is doing and also what I'm doing with that. Let's switch to US oil. Starting with US oil on a monthly time frame, we can see that we had a red monthly downtrend line that got broken to the upside. So we had a really long lasting downtrend that got broken to the upside in April 2021. And also we have often tested monthly support and resistance zone, and we are currently right at that level, also getting supported by the 200 moving average, which is a really interesting spot for price action. If we drop down to the weekly time frame, we can see a little bit more in detail what happened after the break of the monthly downtrend line. We had this weekly consolidation, and I was able to draw an orange weekly downtrend line here that got broken to the upside, and then we had another pullback to it or into the zone, was getting supported by the 200 moving average, and I had a long position opened after we have seen the downtrend broken to the upside, and that worked pretty well. But then prices declined, and then the bad Monday came in and prices have been fallen below the last low, and that was the moment where I closed all my positions in US oil. If we drop down to the daily time frame, we can see that we are in some sort of a triangle here. These white dotted trend lines are forming that triangle, and price respect these lines so far and moves inside it. Because of this bad news scenario, we crashed a little bit below it, but yeah, it's not really much, and price recovered directly to the upside into it. Also, MACD is nearly about to cross to the upside on the daily time frame. And here, if we drop down to the 4-hour time frame, we can see that also the trend lines, the short-term blue downtrend lines, are broken to the upside. After the break of this blue dotted really short-term downtrend line, I was getting interested in taking a long position again, and I said if we get above this high here, because then we had the low, a higher low, and then after that we will have a higher high, and yeah, that was the case. So I opened up a trade with the mentioned TradingView account of $100,000, and I was willing to risk 2% of my capital, in this case of that account, $2,000, if we drop below the last low, because then further downside movements are expected, because then this triangle is broken to the downside, really broken to the downside, not just a small fake out. And then I expect prices to decline to maybe the $64 level per barrel. And yeah, then I don't want to be in the trade anymore. But I expect future uptrend movements. And yeah, then the major 4-hour downtrend line, the solid one, got also broken to the upside. And at the moment, I'm in profit of 1.3% or $1,300. But we'll see on Monday how it goes further. My take profit would be at a 2-to-1 risk-reward ratio. So if price rises above the $81 level per barrel, that would trigger my take profit, and the position will get closed automatically. That was what I was meaning with no manual trades, only the fixed automatic ones. And yeah, that would bring me in 4% into my account balance, or nearly $4,000. Yeah, that's it so far for crude oil, and I will inform you on the next weekend report how all played out. Maybe I'm still in the game with this trade, maybe I'm out. Either to the downside or to the upside. We will see. Let's switch to gold. Gold on a weekly time frame looking good. We are in an uptrend. We have this monthly uptrend line and also a weekly uptrend line. Price is still above, far above, because price was able to break this often tested resistance zone to the upside, and from there on price moved pretty fast to the upside and was consolidating a while. If we drop to the daily time frame, we can see this consolidation area here, and that price was able to break it to the upside. Then we came back in, tested this white dotted secondary daily uptrend line. There we came back up. We haven't been able to make a new high, and we moved, in my opinion, into also some sort of a triangle, or at least it could develop into something like that. Here was the bad news, and prices declined pretty sharply to the downside, and there was also the point where I sold my last positions. But now with the new account, I'm back in it, and I will show you that on the 4-hour time frame. On the 4-hour time frame, you can see the nice pullback to this secondary daily uptrend line. We find the low and broke a blue dotted downtrend line to the upside. That was the point where I got into the trade, and here around that level below that, I don't want it to be anymore in the trade. But here the bad news pushed price to an insane level to the downside. But gold was the asset that held the best this crash, and here I think in crisis situations it's never a bad idea to be invested a little bit with gold. It's calming the mind and the portfolio. But then we had the possibility to draw a new 4-hour downtrend line. That one got also broken to the upside, and I was willing to take a trade directly afterwards. The better entry would have been, or the safer one, to wait till you see a pullback. Then you would have seen that was the low, that was the higher low, and after the break of this we had a higher high, and from there on you see a shift in market behavior from a downtrend to an uptrend, and that would have been the educational entry point for this trade. I was a little bit earlier because I had fate in the market, but fate is not really the thing you have to trust, especially in the beginning. If you have more experience in the market, you are often with your gut in the right direction because you have seen a lot of price movements and you got some kind of feeling for the markets at some point. Yeah, we are trading higher and prices are also moving higher. I am 1.1% in profit mode this position, and I was also there willing to risk 2% of my portfolio, in this case also $2,000. My take profit is, I have a reason to set it that high, is this Fibonacci retracement level, which I was drawing from the low of the movement to the high of the movement. Here you can see it. And yeah, price reversed picture perfect on the 0.618 Fibonacci retracement level and moved higher from there. And the first target of the Fibonacci retracement would be this 0.272 Fibonacci retracement, and I want to play it a little bit more safe and placed my take profit a little bit below that. That would put my trade to a 2.5 risk reward ratio. So if price of gold went above $2,500 per ounce, I would receive 4.8% to my account balance, or in this case $4,800. Yeah, that's the trade for gold. So I'm still bullish, and yeah, what would change my bullish opinion if we see price declining and getting below this low where the new movement started. That would be bearish, and because of that I would get stopped out here with my 2% in minus, and from there on I would expect at least price to decline to this lower end of this range. Yeah, and from there on we would see further. I will keep you updated on my next report. Let's switch, last but not least, to Bitcoin. Bitcoin on a weekly time frame, we can see that we made a new all-time high in this bull run, but after that we have seen declining prices. First I thought that would be the low, and then we will break higher, but the market turned before making a new all-time high, making again a lower low. I thought that is the low of this weekly correction. Then we went back up and we turned before we even broke the last high to the upside. And now during the bad Monday, we have seen a steep price decline, forming again a new lower low around $48,000. US dollars, this support hold it. We can see it a little bit better on the daily time frame. Here you can see the white dotted price channel that's fitting really well in my opinion. And here you can see that we had a candlestick all the way down to the $48,000 level, but then that got bought pretty fast again, so that the candle was closing not below this price channel. And from there on, we have seen then a really big engulfing green candle to the upside, getting in this area of this support and resistance zone. And we broke it even slightly to the upside, and now we are retesting that area. Because of that, that's not an unimportant moment. On the 4-hour time frame, we can see that the 4-hour solid downtrend line was already broken to the upside. Now we're a little bit retesting that area. The secondary 4-hour blue dotted uptrend line was broken to the downside, and MACD is crossing also to the downside. Could be an indicator that that isn't the whole correction, and we will see directly a break to the upside, but maybe we'll see something a little bit correcting more deeply, and that would also fit with this support area and that one. Maybe we'll see something like that, and then a break to the upside. But we will see. I keep you updated. And yeah, I could draw also here the trend line. If we see the lower low from here, then that would be a good downtrend line to watch. If we break that one to the upside, that could be a possible setup for a long trade with stop loss below that formation and a take profit on the upper side of the channel. If we have something like a 2-to-1 risk reward ratio, I will probably take the trade and inform you in my next weekend update about it. That's it for this weekend, guys and girls. I hope you enjoyed the content and it was a little bit helpful to you. We will see and hear us next weekend. Bye bye.